So they're going to shove him on there as early as possible.
Absolutely, yeah. They wouldn't take any risks with him.
They're not going to take any risks. Yeah, it's just funny that well, not funny, but the peculiar way it kind of like happened in the wave that it happened, because he had it and then it went, or it seemed to be clearing up. But I guess I guess
Lost you, mate. You've gone ski.
I've gone
Back again. Yeah, got you
back again. Okay, great. Okay, so let us get down to it, mate. Good morning, everyone. By the way, we are
morning, Ash and all.
Yeah, good morning to you, Jeff. Good morning to you.
How's things on that side of the world, mate?
Oh, well,
you got the boss man in a bit of strife in intensive care, they tell me.
Yes, he is. Yeah, he is, isn't it?
Oh, I've lost you again, Ash. I don't know what's going on there. I think it's your side, but I could be wrong. Good morning, Helen. If anyone can hear Ash, it would be wonderful if you could let me know, because I can't hear him. And I'm pretty sure he's talking. Of course he's talking. He's always talking. Okay, what I might do is just wait for some. Are you back, Ash?
I don't know. Am I?
Yeah, got you.
I am. Okay. I wonder whether it's okay.
No, you're gone again. Don't know what's going on there. What I might do is take the screen and work on the pound trade at the moment until Ash has sorted himself out there. I'm sure he's trying his hardest. He'd be like a duck on a pond at the moment, with a lot happening underneath the water. Speaking about a lot happening, it appears that we are in a US dollar selling session, or certainly at the moment it looks that way. That's very interesting. We'll be talking about that a little bit in the near future, I'm sure. But of course, we will be talking about if we can get Ash in a stable situation, the FTSE trade that you guys should have been in from yesterday. That's still flowing, and we'll have a look at the CAD Swiss and pound CAD trades that I'm still in on this chart. I actually closed both of them on my personal account over the weekend, but I left this one open. What else have we got to talk about? Oh, the pound trade, of course. Hello, Ash. You back?
Oh, you can hear me, can you?
I can now, mate. Yep.
Oh, it's really intermittent, isn't it?
Yes. It seems every time you try and share something or change charts, the bandwidth is too much, and we lose you. Like, well, I think we have again now. All right. Let's take a look at this pound trade then, pursuant to what I just said, which was dollar weakness appears to be the name of the game right now, in the last hour or so anyway, or maybe even all day. If you have a look at this chart, this is cable, pound US dollar, which is the one that we seek to trade. We'll go through yesterday's trade in the not too distant future. That turned out to be a very small winner, but I guess a winner is a winner. You probably wouldn't be able to buy too much with the proceeds, however. All right, we've got only seconds remaining before this candle closes. It will be, the high of this candle will be the top of our range, the range being the last 3 1-hour bars prior to London Open, and this, of course, will be the low. So we can set the short anyway whilst we're waiting for that candle to close. Actually, we better set the long, hadn't we? Because this may well just take off. So we'll have a buy stop. And as soon as this candle closes, we'll have a high, and therefore we'll go 15 pips above that. The high is currently 1.23195. We'll call that 1.23120. So there we go. That is still the high. We'll go what? How could that change? No, that's right. 1.2320 we'll use and go 15 pips above that. So 1.2335 will be our entry for the long. 1.23. Oh, I'm pressing the wrong button here. 3.5. And the stop loss will be 10 pips below the low of the range of the last 3 bars prior to London Open. That will be that candle, the low of that candle, which is 1.2258, which becomes 1.2248. Okay, 1.2248. And we can place that order. 23.35, 22.48. I've got to remember that. 20. Forgotten it already, haven't I? All right, this will be the short. So the short will be the exact opposite of the long, where we'll have our entry at 10 pips below the low of the range, which will be 1.2248. And the stop loss will be 15 pips above the high of the range, which is the high of that bar, which was 1.23 forgotten, 4 something. No, 1.2335. Okay. There we go. We now have both orders in the market, and terrible entry here. I've got to say, I wouldn't like to be taking that entry if I was using discretion here. I'm not. I'm simply trading the breakout. So that entry doesn't look so bad, but the long entry doesn't look too flash to me. Bang, 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 hitting your head on that monthly pivot, which of course has now been broken. Some hint here of a lower high. I'll tell you what, if we get to there, I'll very seriously look at a short. So I'll be probably trying to swim against the tide of dollar weakness here and looking to trade the pound short if we get something that suits me up here. All right, yesterday's trade, we traded, as always, the range of the last 3 bars prior to London session. That would have been where? Right, that was the range. That was the high of the range. That was the low of the range. We entered with this big bar here. And we'll switch that to that would have been the entry level, actually. Switch that to a 15-minute chart once you get triggered, which meant we got taken in on that bar right there. As you can see, it crossed the daily pivot, which was, again, not a great entry point for us. But as soon as we get triggered, we're looking for 2 buying bars in a row. One there, none there, one there, none there, one there, none there, one there, 2 there. Okay, so that gets our stop loss to that point straight away, and that's as far as we got. So you can see
with you, mate.
Sorry, mate.
Oh, I am in. Okay, great. Yeah, I wasn't sure. I've turned off YouTube because I think that might be one of the issues, so I can't see the questions, but I'm in with you anyway.
Okay, I'll read the questions, no problem.
Right.
So how many pips did we make on that? Can we count them in pips or can we count them in ticks only? So the stop loss went to there after we entered probably here. Sorry, to there. That was our stop loss. So the low of that bar was 1.22924. The entry, can't remember the exact entry. I'd have to go and have a look at that. That's what journals are for. We nearly got to that in the US session last night, but wow, what a first session that was. It just flew like there was no tomorrow. And an hour went by in seemingly a heartbeat. Okay, so yeah, look, a matter of digits we made on the pound trade yesterday. So hi everyone, g'day John, g'day Lewis, g'day Crystal, g'day Helen, g'day Raymond. Hello everyone. Thanks for joining us. All right, whilst we've got Ash and he's in fine fettle, let's have a look at the FTSE trade that is still running and what we need to do with it. Well done, mate. By the way, good trade. Yeah,
good start to the week. Let's bring this in then. So let me show you my screen. So let's have a look how we're going to manage this trade. I'm hoping some people are still in this. There's obviously sort of different ways that you can manage a trade. But I do think in this current environment, it's a pretty good idea to just let things run. You know, if there's a chance to let it run and we don't have to do anything, because the markets are still going to be tricky, and they're going to be tricky to the point that I believe we will be coming down again at some point and maybe even hit the lows again. But while we're going up, let's ride it. And we are now at that monthly pivot that you can see here, with a bit more room, but by the looks of things, just to get to this particular level. Now that's the key area. That's the area that we haven't been able to break through to change this pattern. So if we can get through that particular point, then we might start to get up and close some of these gaps. And then we can start, you know, thinking about the short again, because the market is going to become just a bit overvalued in a scenario like this, purely because the earnings and the earnings and the buybacks that we were talking about the other day as well. So let's mark off some levels and see where the market may ultimately get to, and see what we're trying to take advantage of. Here's some lines, and it's well worth drawing some of these lines on your charts. Looks like that gap there as well, and this gap here as well. So after this particular point, there actually looks like there's some open water. Now we're just going to check on the longer term time frames and make sure there's nothing else that looks. So this looks the most obvious at this particular point. This would be the gap close. That's at 64.62, which is another 700 pips to the upside. It's going to take a while to get up there, if at all. But if it does get up there, then that's probably the time that we start looking for the shorts. What would be really good, and this is a weekly chart, so it would be really good if it started to coincide with some sort of trend line as well. That's probably angled a bit deeper and a bit more steep. So let's have a look at this on a daily chart. Yeah, I mean, for that to coincide, it's going to be it's going to be April by the time we get out there, and we really could manage this right up until that particular time. So I will look for certainly the lower end of the gap to start with, and then the higher end of the gap. So another question is, how are we going to manage this? Well, really, with the market going the way it's going, there's no reason for us to kind of flip positions at this particular point. And I'm not sure where everybody got in, but you should be way more than 1-to-1 at this particular point as well. So we are now flipping. Now, what I like to do at this stage is flip to a 4-hour chart. So where we were entering on the hourly and just checking out the 15, when things were starting, I was just getting the stops nice and tight. But as soon as we start to take off from this level here, now for the 15 to break structure, it needs now to get below here. And that's going to be a little bit above where we entered. But what we'd really be looking for is the market to give us another swing of some sort. Now, I don't know whether it's going to be on a short-term time frame or long-term time frame, but this structure is going to be from here now, to here. So coming down and then going up. This could potentially be an add point. So taking a little bit off the table here and adding it here is a really good idea. So we take a little bit of profit at the monthly pivot. It's likely to struggle here initially. Where it comes back to is going to be the question. But if we take a little bit, take half profit here, if it comes down, then we put that back on again. If it doesn't come down, we just enjoy the fact that we're continuing to go to the upside on the other half. But considering where the stops were initially, this is way more than a 1-to-1 now. So even if you were to leave stops at the original place, taking half off here, makes your trade completely safe. So it's now about scaling in on a retracement. Now there's a different way that you can scale in as well, which would be take half here and put a full one on here with the stops at this area now. So everything starts to shove up. So you effectively have this this first trade as a complete freebie. But what I like to do now is go to the 4-hour chart, because now if we can get a longer term move, which, you know, it doesn't look like anything today is spoiling it so far. So if we can get a longer term move, then the stops are going to be in the same place, which is great for us. You know, for this to really start to break down, it's going to have to take out this low. It's going to have to take out the daily pivot. So for us to put in a stop under the daily pivot is perfect. And at that particular time, instead of taking half off here, we could just leave things as they go. And then when it's, if it can manage to get up, as it comes back down, let it pop up, then take half, and as it comes back down, you start trading on a 4-hour time frame instead of an hourly time frame. So now we are in and running, and we've got a 4-hour trend starting. We can look at this a little bit differently, and that would be my preference, mate. To be honest, if we have a trade moving in the right direction, then it's much better to kind of go up a few time frames and see if you can just ride it out after entering on a short-term time frame. There's no reason now to manage this on a short-term time frame because it becomes just too hectic. So now I'll flip the way that my screens look, and I'll purely look at the longer term time frames from here on in.
Happy days. I think the longer term time frames at the moment are my best friend, to be absolutely frank. I think the volatility for the 30-minute strategy is making it almost non-tradable. And the reason for that is because I take profit so early.
Yeah.
It's any whipsaw at all, and the market's whipsawing like, whiplash.
It's calmed down though, isn't it, mate?
It has a bit.
It has calmed down. I was just going to bring up Forex Factory as well and see what might sort of change that. I mean, the market seemed to be when we kind of got into this period, this area down here, and then this one. It's starting to get back in a range, which is quite good, when it goes back in a range, because it has to break out of a range at some point. So if we can pick it up at the low end of the range in an uptrend and it goes, then you start to get a decent run again. But it's this stuff is the hard stuff where there's just no pausing, which is dropping and dropping and dropping. That's really difficult. But the market does tend to range, and that's all we've done really right now, isn't it? We just
what a trend is, don't you?
Tell me what the trend is. Your friend until the end at the end.
It's just a roadmap to the next range, mate. That's all it is.
That's right. Yes, that's right. That's right. Yeah, it's funny, isn't it? And that's the thing about market structure. And that's the interesting thing, I think, about the slingshot, because actually it takes advantage of what happens in the market most of the time, rather than, we're all trying to pick up the trend. Of course we are. That's the key to making the big profits. But actually, the market doesn't trend that often, comparatively speaking, to the amount of times it ranges. So if you can pick it up in a range, and your timing is decent, then you start to trend. Then you've really got kind of double the advantage, because you can take some profit within the range. As I say, we are at the top end of this particular range now, so there is a chance to take some profit here.
Classic example of that was, and guys, if I'll show, I've worked out a way to show you the link to the Telegram channel. I'll show you that in just a tick. But if you're not in that Telegram channel, you probably need to be, because there's some really nice free stuff going on in there. Yes, at the moment during the crisis, but that will be ongoing. That free information will be going in there. And those of you who weren't privy to that may have missed the pound Aussie trade that I'm in at the moment, the short on that, also the euro Aussie trade that I'm in at the moment.
Oh yeah, we talked about that in the show yesterday, didn't we?
Yep. Yeah. And that's classic example. Pound Aussie is a classic example of range trading.
Oh, brilliant! Yeah, we can have a look at that either in this session or the next. But anyway, should we have a look at Forex Factory? I don't know if you're keen to get. You've got a little while, haven't you, before the
I've got another 15 minutes. Right? Yep.
Okay, so really, thinking about this, the way that the markets are going right now, a lot of this is down to stimulus. The Japanese came out yesterday and added some further stimulus, and the stimulus at this stage is calming things down. The interesting thing, really, with the stimulus is, and this is why I think we're probably going to come down pretty hard and heavy at some point, is the interesting thing about the stimulus thing is that at this stage, we don't know if it's helping. We don't know whether it's going to take effect. What is helping the situation right now is the lockdown. And it's almost the irony is the economy needs to grind to a halt for us to get through, by the looks of things. Cases in Italy and Spain seem to be diminishing. So the only way to really continue that is to stay where we are, stay indoors, and effectively stop working. So the lockdown and it's just a question of whether people have, can continue to have the wherewithal, motivation, and money, really finances to
Money,
remain
money,
indoors.
money. Yes.
Yeah, and this is
This poses an incredible economic question for me.
yeah,
And what happens when we come out the other side? I mean, I know we will, or some of us will. I just got no idea who and how many.
yeah, yeah,
That's a big question, and I
yes,
don't mean to make light of that. It's an incredibly serious situation.
yeah,
But with all this fiscal stimulus going on, and virtually money being thrown at most individuals around the place, what happens if this goes for 12 months or 18 months before the economies start to tick over again?
yeah.
And look, I'm being devil's advocate here. I don't believe that's going to be the case, but somehow, the governments and reserve banks are just going to run out of funds, and what happens then?
Well, I mean, will they though? I mean, is it just a case that they can just print and print and print? I mean, obviously, that it just because
Well,
really
we have to recalibrate everything if that's the case.
yes, we do. Yes, we do. And this is the big question, isn't it? And this is the big question about the
Mm.
European Union. It's the big question about gold, because things will tend to go back to gold, as a recalibration, as you say. But I think the other aspect is that the more money is printed, the more that money is devalued, the more the currency is devalued. So when something gets when something is devalued significantly, then you get inflation. And I think that's really the elephant in the room. The inflation story and the inflation picture is the big question. But a lot of people, I've heard a lot of people come out and say that there won't be inflation. And I wish I could remember their reasoning, or I wish I'd taken a screenshot of the reasoning behind it, because they made a fairly compelling case
Oh yeah,
of the
okay,
reason
that's
that
interesting. Hmm.
yeah, absolutely. In actual fact, it probably wouldn't take me very long to find it. So I will do when you're looking through the other charts. I'll have a look through and see,
Yep.
what the argument is for there being no inflation, and continuing to be a deflationary scenario. But either way, the value of money is going to change, or it changes from here. So there are still tools that they have, and I suppose printing money is one of them. But it does mean that goods and services do become more expensive. Now, Julian on the weekend was talking about this, and this is the argument with inflation. If there is to be inflation, that means that um, commodities and energies, and housing, things like that, the things that people really need and that are necessary, all of a sudden start to become front and center. Food, if inflation happens, then the essentials really do start to get bought up, start and they will start to increase in value. So it's an interesting time actually to be in the property market, even right now. Not many people own gold. Some do. Not many people own oil. Not physical anyway, but there are a lot of people out there with physical property, with
Hmm.
properties. And
Hmm.
and it will be interesting, if we do get inflation, what happens to the property market all of a sudden? Because that could be absolutely flying, by the time this is all cleared up.
Yeah,
Um,
big question marks, mate. And I really don't know the answer to it. I've got no
no,
idea. I'll
what
leave that
happens
up
to
to
the
the
euro?
experts.
This is where we are anyway. This is what we got today. The 30-year bond auction in Japan is of interest, but not huge interest. It's not going to make a massive difference to the way that things move, especially the way that they've kind of been pumping. Leading indicators from Japan again. German industrial production month on month increase in the production in Germany month on month, which I do find quite interesting. A massive drop, but an increase from what's forecast. So some of these numbers actually are starting to be maybe slightly more conflicting than we had been previously reported. The fact that it's green, no reason to get too excited, because when we look at the graph here, there's still a huge dip in the factory orders, but it's not that extreme, is it, mate? When we look at this on the graph, down there would be a really extreme level, up there would be a really extreme level. So it's sitting somewhere around about average, isn't it? So
about par, mate. Yep.
yeah. So industrial production, nothing really to see here. French trade balance, actually, that's decreased a little bit. Halifax HPI, I suppose maybe these numbers are going to be start to become interesting if we're following the property market. And as I say, yesterday, some of the property stocks in the UK were actually probably some of the outperformers. So I'll have to dig a bit deeper to find out what's going on there. But I think the big thing out here is that there's not really a lot to see. So barring some news or some tweet or some intervention from one of the world leaders, it doesn't appear to me that the market is going to change direction, which is another reason why when we look at this, the longer term time frames seem to make a lot of sense, because
yes,
with if people consider volatility is expressed much more prevalently on shorter term time frames. And if we're looking at the data, it's not suggesting a day of volatility. It's not suggesting, it doesn't mean it's not going to happen, but it's not suggesting that. So while it doesn't suggest that, there's not really much reason for us to be too concerned about trades that we've got on that are going in this direction. So the best thing for us to do right now is just sit back and allow it to unfold, because there's every chance that we do break through this level. Then who knows where it goes? Could go there, could go there, could go right back up here again. And because that's the nature of the market. Unlikely as it may seem, and it is unlikely. I think that we are coming down again. I think that people do start to get a bit too comfortable when the market starts to turn. But that's the way the pandemic's been in some respects. The pandemic was reported, and yet we still had a few buying days here, on the way down. But I think that there's far too much in the background. There's far too much going on in the background to suggest that all of a sudden stocks become decent value down here. The likelihood is companies just aren't going to make any money. There was a company that went bust. I think Debenhams. Yeah, Debenhams, which is a huge retail outlet over here. I think they're either I think they filed for administration. So they are, we might see that story just starting to unfold. So I think we enjoy any move to the upside, and as soon as it starts to turn, that would be my preferred time to come out, rather than just picking a level and coming out. I'd like to just ride it as long as possible, and then if it starts to turn, take off the long, flip it to a short, and see if we can get it back down again.
Still got a gap to close there, mate, and a big trend line up the top. That'd be a decent area to get out.
Oh, I mean, if we get up to that point, then
You'd be happy with that.
Well, I would be happy, but I'd be incredibly surprised. I mean, it would be ridiculous, to be fair. We get it all the way back up there, because we wouldn't be that far away from the highs. We'll be about 10% off the highs.
Yeah, not likely to happen.
I don't think so.
Until we've got a vaccine, or
exactly,
this thing disappears.
Yeah, exactly. Or we actually, we're actually through it. I think that's the most likely scenario. What I'm looking to unfold here, what I'd quite like to see unfold in my kind of mind's eye, is for us to get up here and really there would be best, because as soon as we've closed the gap, then we're good to go. We really are good to go, because really the gap always ends up. I mean, there's one here as well, but it's so minute that it might not make much difference. But this one is pretty glaring. So closing a gap really gives a green light to turn around again. And that might be one area that I would consider closing the trade. If I wouldn't need to see too much up here to change my mind on closing up and taking profit, and then just waiting for a reversal sign and signal. But actually, just up here, if I saw maybe some fluctuation going on like that, then I would want to take it off somewhere in this area and wait, because the next assumed move for me, if we can range up here, would be down rather than up. And if it breaks up, then no big deal. We might have to take another trade if we get there. But that's what I'd like to see. I'd like us to see us get up to this level, mess about up here, take profit, and then start to position again for some further downside.
as you say, it's unlikely. And if we start to think sentiment cycle, you're
Yes.
probably looking at matching the most recent high, really, aren't you?
Which one's that? This one here.
I can't see where you are.
So
after the first rally off the bottom, yeah.
Yeah, this one here. Well, that's where we're
the
at
sentiment
now.
cycle will tell us that's where we're going.
Yeah, have you got a picture of the sentiment cycle? Be worth bringing that up, actually.
I've got one on the wrong computer, and I can't share that screen with you. But,
no problem. Okay, I'll search for it while you're looking through the half hour charts. So just to finish up with some of the data points. So today we're doing nothing. Today we might even be expecting no movement one way or the other. We just kind of go into a bit of a range. Second week in April. Incidentally, the market does tend to be quite bullish from here right up into May. So that's another reason why, if we can stick with this for as long as possible, we'll see it unfold. Because if we're up here by the end of April into early May, then that's going to increase the probability it comes down. And if anybody's new to this game, they may not have heard one of the most famous. There's two. And we might have more. In fact, we were doing it for a little while, weren't we? Just little statements and quotes, yeah. But two of my favorites is sell in May, walk away, which effectively is telling us that the summer months tend to be some of the worst months to trade to the upside, to hold on to longs. So people just get out of their positions in May and they walk away till around about September time. They come back in September, October. And the other one is how goes January, so goes the year. So if January is bad and January is bearish, then the year's bearish. If January is good and bullish, then the year's bullish. Because but both those two statements, they work out more often than they don't. So we might well be on that. I don't know if it did last May actually, or it might be the previous May was incredibly strong. But I think this year, if we are up to these points by the start of May or the middle of May, then we should be looking, for further downside with that particular seasonality aspect in it as well. So April can tend to be a pretty good month. So another reason we should hold on as long as we can. No guarantees, might end up coming down here and going short again. But let's give it some room. That's what I'll be doing for right now anyway, mate. Just giving it some room and seeing if there's a chance we continue.
All right, mate. Yeah, there's some classic quotes. Sorry.
Yeah, we'll get some more. Maybe we'll bring the quote section back to life again.
Yeah, we might do quote of the week or something.
I was just going to finish up with a week here, mate. We've got GDP from the UK month over month. OPEC meetings, which I think that's going ahead. We got ECB policy meeting accounts as well. Could be of interest. Certainly they've flagged it up as a red folder as well. Unemployment claims from the United States, obviously going to be of huge interest as well to continue to see how things are unfolding. CPI data and core CPI data. This gives us an idea of inflation. So want to look at that. The M2 money supply as well. Now, this is going to be quite key. I know it's only a yellow folder, but we do need to have a look at that and see if that number's moved around a lot or not. CPI in China as well. So the CPI numbers are really the main points of interest. And I think that it suggests that towards the end of the week, we may well start to get some movement, but not for right now. So let's pass you the screen, mate.
Okay, mate. One of my favorite quotes just off the top of my head was that one that says, this time it's going to be different.
Yeah. Yeah. And it never is. Yeah.
It's always the same, folks. And just remember that. That's a beautiful quote. And what makes you think this time's going to change? And if you can find that sentiment cycle, I think that will be a perfect thing to look at. The sentiment cycle versus the FTSE at the moment would be really good. It looks so close to me.
I will dig it out.
Yeah. Okay. So everyone's selling US dollars today. I think that's fantastic. Don't care at the end of the day, because I haven't been a US dollar fan all week, if not for the last fortnight. And the reason is pretty much due to the volatility around it, but more so the dollar index and how it's trading against the major currencies. It came off a big high, which was 103. That was about 3 weeks ago, I think, if I recall, and retraced a decent amount, and now is halfway between the retracement and the high. And it's really, really really difficult to get a read on that as far as I'm concerned. A lot of people got a bearish outlook on it today. That's fine. In fact, that may just tip me in the opposite direction, because if the world's going one way, generally I like to look the other, and that's probably the theme that I'll take into today. So let's talk about euro dollar to start. Well, we have been triggered in the pound as well, by the way. We'll get to that in a tick. Long, which is not my preference, but there you go. We might find a short somewhere. Euro dollar, yeah, look, has come into an interesting phase of this volatility that is extremely evident when you look at this chart, where we've gone up, down, up-ish, down-ish. We're really not hitting the bottom or the top here at the moment, but well, not so much but, and you can see that we've put in an equal low here, and that has seen the market or euro dollar rally substantially in the last little bit. I'm on a daily chart here, so that's the day bar that you're seeing, and we've already gone nearly 100 pips. I see this as an opportunity to short this again, I think, at the weekly pivot. I'll see what happens at the weekly pivot if we get there. Why? Yeah, look, I'm seeing yo-yos at the moment, and the yo-yo seems to be running out of steam, if you like. So we're not getting to the top as vigorously as we were before. We're not getting to the bottom as vigorously as we were before. But the yo-yo tends, in my opinion, to peter out and fall to the downside. So that's kind of where I'm at, but I'm not committed to it in any way, shape or form, for two reasons. Number one is this equal low. That probably will give the bulls a little bit of momentum, and the market sentiment is definitely sell the dollar at the moment. So that's kind of weighing on my mind. I'll make a decision when we get to the weekly pivot, and if I've got some confluence around there on one of the time frames. And lo and behold, we do have exactly that. So I'm a long way from hitting this confluence area, I've got to say. We're probably into maybe changeover between US session and Australian Open tomorrow. But what I'd like to see is price get up to the weekly pivot, maybe even get above it, take out this trend line, come back underneath the confluence here and retest it. If I were to see that, then I would definitely be looking to trade this short again. This line here, the trend line, is pretty much crucial as far as I'm concerned. That will tell what happens next. You can see it's bang in the middle of this range, which is that descending channel, right? There's the high, there's the low. And that's what I'm saying. We seem to be running out of puff here in both directions. So if we take then longer the stronger, then the trend is definitely bearish in my humble opinion, and the momentum is also bearish. So as soon as I see an opportunity to get short, that's exactly what I will do. Dollar yen, exactly the same, isn't it, really? You know, we've had massive top here, right down to the bottom to the pip, right up to the top, kind of run out of puff, didn't get to the top of the channel, and now we're finding that the pivots are taking over from the descending channel. So I'm of the opinion that this is going to probably oscillate in this area for a little bit. If it doesn't, I'm probably slightly bearish, but yeah, it's only really slightly. Again, it's in the middle of nowhere for me. I don't see a clear reason to go in either direction. But if I were to see that, It will probably come off a former resistance level, maybe there somewhere. So, you know, trend line through here, a bit of confluence. Maybe I'll look to play a false break. You'll just you'll see me looking for false breaks more than I look for anything else. Why? Well, we discussed it at the beginning of the show. The market ranges far more than it doesn't, and what that really means is there are far more false breaks than there are breaks of resistance and support. So I'm always looking for that. Always looking for a reason to trade in the opposite direction to momentum, if you like. So false break, false break. And as I said, nothing could be more evident than, and I'll just sneak in to the miners for a second. Oh, there's that link, guys, by the way. There's that link there. We can't post it because YouTube won't let us post it. But that there, if you want to copy it, is the link to the Telegram channel. So I'll leave that up there for a little bit and I'll talk about this trade. So range was established very, very clearly for me on pound Aussie. And then we were presented with this amazing double top that I said was probably the most pronounced tweezer top that I had seen in the month of Sundays. And as soon as I saw that, I was waiting to get short. The only way I can get short, however, is with a significant lower high. And the daily chart generally is the one that I'll go to for that. Then we printed this bar here. And that really was telling me that if this is to go long at this point, it will probably test the highs. It's broken out of our range. And if it doesn't go long, the point that it will go short at is at the break of the low of that bar. So that's where the false break occurs to me. It's telling me it's false when it comes back underneath the low of that bar. And that's exactly what's happened so far. We've obviously taken profit here at the monthly pivot. We're looking to close most of the trade when we get to this confluence area. In around about, where are we now? 200 pips time. So we've got another couple of hundred pips, hopefully, before we hit that level, and that's where we'll take most of our profit. But because we do have that massive tweezer top sitting here, I would definitely be looking to scale back into this at some stage. So what I'd need to see there is the break of this level, then the retest of the confluence area. That's where I would scale back into this and trade it down to here, take some profit there, and then look for, wow, look at that. If that actually reverses, there's a whole truckload of money to be made here, a whole truckload of it. And I'm not to say that can't happen, given the potential for the Aussie to rally on the back of China going back to work and manufacturing. So that's always been the theory. If it pays off, it pays off. Happy days. We can't lose here. That's the main thing. Going back to, and we'll talk about that in the US session, of course, all the minor pairs. So the Aussie on the back of, well, I guess analysis as well as a less than dovish RBA statement, I'll put it that way today, where Philip Lowe was, and I think that's probably the best way to put it, less than dovish, because it would be very, very easy for a Reserve Bank governor to be quite dovish at the moment. One of his statements was a little bit on the dovish side, though, and he wasn't really talking about interest rate cuts. He was talking more about fiscal policy when he said that the bank would do what it could to assist the government in providing that, or keeping that stimulus going. So that was the only real, I'll call it a negative for me, for the Aussie prospects. I think I'll continue to look at this, however, on Aussie US dollar as a range. I don't know that I'm a bull Aussie US dollar at this point. So again, here we are at a potential trading point. And as soon as I see this break to the high side, it'll depend how it breaks. If it breaks and gives me a clear break with a decisive bar, exactly the same will apply to what I've just described on pound Aussie. I will look to place an order underneath that bar, short. That may sound crazy, but we'll talk about that if and when it happens. So if this bar was moved to there, or if we get a repeat of that bar, I think that would be an excellent place to take a short. I'm not saying it's going short. What I am saying is if it's not going long, that's where we'll be right, if it's going short. So that's something to look at. So I'm not ready to trade this yet. I've got to wait until it clears that area. US dollar CAD. Well, we did have a bearish outlook on this for obvious reasons. And the only way into that was probably to trade that bar there, and I didn't. How do I get back in if this is to be an US dollar sell-off? And a lot will depend on what oil's doing. Let's have a quick look at oil. Oil's, yeah, it's kind of got a ceiling on it at the moment with the monthly pivot, but that could change. And if that does take off, then so will this to the downside. And you can see that there's a very clear run. Well, we've got to get through that level, I suppose, but there's a very clear run down to the bottom of this channel. So it'd be worth looking for a way back into this, I believe. How? Good question. I don't see one at the moment. I'm looking at the 4-hour chart there, but I do see the monthly pivot. The monthly pivot would suggest to me that there may be a little bit of buying coming back in here at anytime soon. So a little bit of a bounce off here. 1, 2, 3, 4, 5, 6, 7, 8 in a row, dark or black candles. So I'll be looking at this level. And as you can see, that's a long way from here. So I've got a long way to wait for this to get into a short. But yeah, really like to see it back there. It would be a nice confluence area at the bottom of that range that we've just come out of. But I'm talking same time, I suppose, early in the morning, my time anyway, when maybe Aussie session opens or Kiwi session opens, something like that. Do I want to trade it to that area? I wouldn't mind if I had a reason, but I trade off trade lines and trend lines and confluence areas. So there's no confluence here for me. So the answer is going to be no. This time it's going to be different, Helen. That's right. This one's very, very difficult, dollar Swissy, because again, we're in the middle of the range, as you can see. We are crisscrossing the monthly pivot and all the pivots with very big bars. So very, very difficult to find a way in here. And I think I would just dismiss this as a trading opportunity until we break a level. So the level that I'm looking at obviously is this trade line. That's a weekly chart I'm looking at. If we get into the daily, so I'm looking for price to get to that week, to that trend line. Don't see a real good opportunity for that at the moment. 4-hour chart, a little bit different. We've got a few options here. You could trade the breakout if you so chose. That is not my favorite way to go, but I have been known to do it. The thing I don't like about this is price is just gathering here. It's now pulling back away from it, of course, but I don't like to trade when we've got a conglomeration of candles in the same spot, and the same spot for me is this trade line here. So how do I get in? I don't see a way there on the 4-hour chart until we break support. And that support level has now been broken, I suppose. It's a little bit acute for me, though, that trade line. I think I'd rather crawl down to a smaller time frame and find something a little bit better than that. Maybe across here. That looks a bit better. So we're at DS2. That's a level I like. If we can close under here, then get back above it and retest it, that opens up the possibility for this to be a false break, right? So we'd be playing a false break of the support, and we'd be looking to trade it long, taking profit here, let the rest run. That's US dollar Swissy. That, of course, as I said from the outset, everything that I'm saying right now will be pretty much counter market sentiment, because market sentiment is clearly in a sell the dollar mood today. You don't see the link because I changed it, didn't I? What chart was that on? Can't remember. Pound Aussie. Sorry, guys. There it is. I can't copy that either. I'm trying to work out how I can get that onto the other chart. I don't think I can. No, I can't. I'll put it back up for you. But if you take a very, very quick, forget the HTTPs and you know how to do that, t.me, so all lower, t.me, me, / capital L, learn, capital T, trading, capital F4, capital F, capital R, capital E, capital E. Okie doke. I'll give you another few seconds to make sure you've got that. So we've got, I'll do it again, https:// I can't quite say that, small t dot small m small e / capital L E A R N capital T RADING capital F O R capital F capital R capital E capital E. Okay, happy days, guys. Okay, sorry about that. I was going through, well, we spoke about cable, and I'm a cable bear. And again, this is counter market sentiment, which is very much dollar sell. I'm not sure if I can find a way in here though, unless we've got a confluence area here at this monthly pivot. I'm just searching through the timeframes to see if there is one. Again, it's in the future, and there it is there. It's not that far in the future, to be honest. That's the 4-hour chart. This looks really good, actually. If I can see price get up to here, maybe even find that resistance area, then come back underneath and retest the confluence. We've got 3 pivots sitting here, right? Let me draw this, because this will be a little bit airy-fairy. Pen. I'm trying. Very trying, some would say. Come on.
Can't find your pen?
I could find it, but it won't let me select it. Now it has. Draw. Quick draw, McGraw. Right, so what are we looking for is price to get up to here. DR1 would be fine, but this level here would be better. If we can get to there, then come back underneath, not only the trend line, but the monthly pivot, the weekly pivot as well. Let's throw in the daily pivot, eh? then come back and do something like that. Clears this range. Oh yeah, that'd be okay. That'd be really cool if I saw that on pound US dollar. I don't see any other way for me to trade that, frankly. If it were to break here and retest the confluence area without coming back underneath it, of course, that's going to be a bullish signal and could go that way. So the trend line is the key here for mine at the confluence area. Just watch what happens. If we get a clear break and a clear retest, then it's bullish. But if we get back underneath and retest from the underside, then it's definitely bearish. So I'll be happy with, I don't think I'll be happy with the first option, because I want this pound Aussie trade to keep going. But I think on balance, it's probably not going too far anyway. You can see that the pivots are very, very close together. That's generally a sign that the market wants to consolidate. So it wouldn't surprise me at all if we stay within this range. And if that's the case, happy days. We'll find some trades on the shorter time frames. Okay, let's get rid of all that. And let's finish off by having a look at the trade that we're in on pound US dollar. So we're in here, right? And we haven't got even one buying bar yet. So when we get two buying bars in a row, we'll move our stop loss from here to wherever those two buying bars are. This is the first potential. It's got 10 minutes to go. If this is followed by another buying bar, then we'll move our stops underneath there, and so on and so forth. So, mate, that is pretty much where I'm at this stage of the game.
Okay.
If you're in the CAD Swiss, that's looking pretty good. We've now closed that gap, and that looks to be going on with the job. I'm keeping my stops with R at the moment, but I actually closed this on Saturday morning on my personal account. What a dope. Anyway, I was trying to be safe. I was just trying to be safe. And that's now taken off again. This could go. This really could go. What I'd like to see now is a pullback to the top of the range that we've just come out of. So there somewhere. If I saw a pullback to there, I'd be very, very tempted to get back into this, because there's a massive reward or potential reward available if it does go in the right direction. Much will depend on oil, as I said before, with that one. And pound CAD, I think, is retracing a little bit. Yeah, it is, as we see the pound rally a bit. Again, yeah, hard to call you into this one if you're not in it already. Maybe if it gets back to there, you might like to try a short. That might be the only way that I can see into that one. So, mate, that is me. I am done for this session, and no new entries, but
Great.
Yeah, plenty to watch.
Yeah, absolutely. Well, obviously we're going to be back in an hour anyway. I'm going to just very, very quickly show everybody the sentiment cycle, because we were discussing that just before we started the analysis. So if you look at this on the FTSE, we take a leg down and we move back up again. Now, if we check out the sentiment cycle here, this is what happened, and very, very similar. We were in this enthusiastic where we had one last blowout, and it's amazing how mirrored this is really. We have one last blowout, and then we start to fall, and we're probably in this phase here.
That's what I saw. Yep.
Yeah, we're probably in that phase there. Now, I don't know how high that will go, but that does suggest that we get this this one big move. So the panic has happened. That's the panic. This is the release away from the panic, and then we get the discouragement. Now, when we get the discouragement phase, and we are down at the lows again, then we can start thinking about genuinely picking the market up for a long. But I'm going to bring it back to the FTSE chart so everybody can see again. So we got enthusiasm, panic, a rally, discouragement. Let's just focus on these three legs here. This is the enthusiasm stage here. This is the panic. And this is, probably pretty much mirroring what we're just looking at with the sentiment cycle. So it looks to me on this and to Jeff that that we should hit a discouragement phase. Now, even if we are in it'd be difficult to kind of make an argument for any other particular phase right now, just because this does look like out and out panic. And knowing what happened with the market, we know this was an out and out panic. So really, this does suggest that this rally is probably going to, if we think about the sentiment cycle, we are probably going to get this the rally probably swallowed up at some point. Now we will wait and see what see what it is that drives it back down again. But something's likely to.
A good note there, Ash, I think, is that it actually took out that previous high on the sentiment cycle. That may well be a key.
This one here?
Yeah, that high, yeah. It took that out.
Yeah.
Because guess what's there? A truckload of stops to the downside.
Yes, absolutely. Well, yeah, that's really interesting, isn't it? So that would suggest that we do take out this high. and,
yes.
and so maybe somewhere in this area that is where we start to see this move back to the downside. So not even getting up to that point, or getting up to the gap. So we have to be very careful. But for right now, we just need to continue to play the way that the market's
I
moving.
agree, 100%.
You know,
Yeah,
it's moving okay, isn't it, at this stage? And it's attempting to get back up to this level. And if the sentiment cycle is mirrored, then it would suggest we do take out this level, and maybe get back up to some of these areas before we start to move down again. But something's going to drive it down.
That's how subjective the sentiment cycle is. If you have a look at the sentiment cycle in relation to the 4-hour chart,
Yes.
we've had our 3 legs down.
Yes.
It's crazy, isn't it?
Yes, it is. I mean, you're absolutely right. But I don't think you can really look at the sentiment cycle on anything less than the daily.
Yeah, longer the stronger. Yeah.
Yeah, and the daily or the weekly or even the monthly might even come into play. But I think this is probably based on what happens day over day, rather than anything else. But we're definitely not in this phase yet. We're not in the genuine rally phase yet. We got quite a lot to get through, and then it would also suggest as well that we need to see what looks on this sentiment cycle. If we look at this on pattern terms, it would suggest that we have the panic almost becomes like the left shoulder. The discouragement becomes like the head, so we're looking for that to still form, and then when we get to the aversion stage, then we're looking at that right shoulder. So it's the aversion stage which we're really interested in genuinely picking things
real
up.
Killer. Yeah,
and trying to get it on, and you can see these levels that are along here, what it does suggest, but markets never move quite as accurately as one picture that's been taken, but it would certainly suggest that regardless of where we are in this particular phase, we are still going to be coming down for another dip, because panic has happened, but discouragement has not. And I think people are a little bit overconfident still about what's going on, and this there's still the buy the dip mentality. So we need to flush all those people out, really. I even heard that there are some resale traders out there that have taken loans off the back of cheap money to go and invest in the stock market. And that's really worrying, isn't it?
Some would say that's what has been driving the stock market for 10 years.
Yeah.
But now's not the time to be doing that. Wow.
No. But I mean, it sounds like there are retail traders, and we know that retail traders do not dictate the market. They're the last people that dictate the market. So we don't want to see we don't want to see them get burned. But it certainly suggests that the big guns are just waiting for a better price, and then they're just probably going to dump a load of stock on those retail traders, and all of a sudden just people that have taken those loans are going to be in all sorts of trouble. So if you don't know what you're doing, then regardless of anything else, if you don't know what you're doing, then the first thing that you do is protect your finances and protect your money.
Yeah, the first thing is nothing if you don't know what you're doing. That's right.
Yeah.
All right, mate. Well, look, wow. All I can say is wow. If you've been riding scale-ins for number 13 or hell yeah, just keep it going. That's if you've been doing it properly. Oh, Alexis, yes, good answer, Lexi. Hi, Lexi. That's exactly right. That's exactly what you need to be. If you're doing exactly the right thing by scaling in on each occasion, wow, just keep going.
Yeah, absolutely. Yeah, the scaling is really the whether you scale in as it comes down or you scaling as it goes up, it doesn't really matter. That really is the key. When you sort of you put a little bit of money in and then put a little bit more money in, that's the real key to kind of riding a decent move in the market. That's how you control your money. And if things start to go wrong a little bit, then you can always scale out and see if you can get a baseline as well. So really playing with your money and how your money is exposed to the market is a huge aspect to success. Which is why we take profit. When markets get to certain levels like this has here, then you might want to start scaling out a little bit. And just seeing if anything happens and we do start to dip to the downside. So scaling in and out at certain levels is great, and then you can utilize the strategies and the setups to load in or to really start to maximize your entries with the setups and stuff. But picking levels out and scaling out or scaling in is a great way to trade, but protecting your money is the key, isn't it?
You bet. Interesting to have a look at the situation come US session open, when we, of
Yes.
course, will, and see where that's up to.
Yeah, absolutely. I'm, just the way that the FTSE's been moving so far this morning. If we look at this on a 15-minute chart, there's been a bit of weakness. We've again got back above the monthly pivot. There's obviously a little bit of weakness up here, so likely that we drift to the downside at some point. But it just looks it's quite calm at this stage in time. So at this point, no reason to be closing any trades. This still has got some information to give us. So I think we just let it unfold. And potentially just kind of like mess around in this area a little bit and see what happens. But we're in a trade right now, which puts us in a fantastic position just to manage what we've got, manage the profits. Maybe take something off the table, manage what's left of it, and see if we get another leg up. As I said before, we're looking for downside, but certainly not right now.
One thing I never get sick of doing is managing profitable trades.
No. Brilliant way to be. Much more calm, isn't it, mate? As soon as you take, this is the thing. As soon as you take the money off the table, you've got work to do. So it's much better just to leave a little bit on and just manage it and see how much you can get out of it, and not have to think about entries and everything else, because it's not easy. Picking the timing is not easy. I can have a run of a week or two where it's just on the money, it's on the pip, and then the next 2 weeks, miss it by an absolute mile. So when you get something which is in your direction and you don't have to worry about timing, it's best just to take the pressure off and just allow the market to give you what's on offer.
Yeah, and there's another lesson too, which we won't get into now because it's past our not our bedtime, our go have a break time. Managing yourself, because
yes.
once you've got that situation that we're talking about, that Ash just mentioned, where you're absolutely hitting it out of the park for weeks on end, and then suddenly you've got no idea. That's when you start to manage yourself and say, well, okay, maybe I need to go to the park today instead of being in front of the charts, because I'm just not on. It's just not gelling for me, and that happens.
I really like that, mate. I really like that piece of insight, because that really is the point, is that you can, get to a point where you'll look at a chart and you just go, I haven't got a clue what is going on here. It happens to everybody, because you just, the market changes. It is a constantly moving. So your approach,
it's a beast. Absolutely.
It's a beast. Yeah, it's a beast. So the key is just to kind of dip in and out, take your chunks, take what's on offer, and not get ahead of yourself. So yeah, that's a really, really important aspect of making money in the market, is just making sure that you understand that there will be times, even after doing it for many, many years, there'll be times that you look at the market and go, I just don't know. And that's the time that you just go away, because it will come back to the point where you do know again. So yeah, managing yourself, as you say, mate, is one of the key aspects of all this.
And we will be allowed to go to the park one day, Crystal. I'm sorry for using that as the analogy. Then try, I don't know, the room,
back garden,
next room, the back garden, wherever you can go. But stay safe doing that. Yeah. Because we want you back. We want you back in the US session later on, and of course we want you back here tomorrow, when we will do it all again, Ash.
Absolutely, we'll be back tomorrow morning at 5 to 0. We'll be in the US session at 9 o'clock Singapore time, 2 o'clock UK time. Not sure what time it is there, mate. What time is that? It's in Australia. 11.
11. Yep, 11 p.m.
11 o'clock Aussie time. So we'll be back later this afternoon or this evening or this morning, depending on where you are in the world. And we'll be back tomorrow at 5 to 8.
And that's a date, so don't you be late. See you guys.